Hi there, traders. This is Brad Gilbert with the week ahead preview. All right, now coming into this sort of Tuesday Asian session, Mondays, I mean, they're a bit of a throwaway day unless there's some sort of major key event on, which invariably there's not. So that's why I haven't sort of got around to doing the week ahead until today. But one thing you'll notice, I'm just looking through trading economics as the calendar here. You're going to start to see a lot of central bankers talking now. They got their hands full, right? And I'm not just talking about the ECB. I'm talking about the Fed, about all of them. So you're going to find from here on in, when the shit hits the fan, so to speak, they will be out and about talking as much as they can, trying to calm things down. I know there's a few summits around, there's a few bits and pieces, but there's also, they're starting to spread their wings wide and far, start talking. They've got to start talking, okay, we're doing a good job, it's all working out, et cetera, et cetera. So you're going to start to see this a lot more through the week. Usually in week 4 of the month, you start to see, you know, a number of central bank speeches sort of arranged, but or scheduled. But now we're starting to see it across the board, right? So you are going to start to see a lot of punters talking. Don't get desensitized by that. Always have a look around what they're talking about, right? Is a key thing. If there's a Q&A, etc. And also, if they're on the board, if they're like the Fed, right, the FOMC, are they a voting member or not, right? If you've got a vote that goes towards a change of policy, that's much more important than someone who is speaking that doesn't. And invariably, the people who don't have a vote, they come out with really weird, radical stuff to try and rock the boat because they're a bit pissed off they're not in the main game. Now, start of this week, also Tuesday, start of the midterm elections in the US. Right, we probably won't know the result till later in the week or definitely by early next week. That could sort of rock the boat as far as the political spectrum goes in the US. Does it change things with the Fed? Not really, right? I know they can, they can change things down there, but you know what? The Fed are doing their own thing. We'll have to wait and see if there is any sort of major fallout from those US midterm elections. Now, so looking at the week, right? It's pretty easy now. Unless you've been hiding under a rock, we had non-farm payrolls last Friday. There was a little blowout from 3.5% to 3.7% in the unemployment rate. There was a better change. There was a higher change as in the number of people that got jobs. But I tell you what, that weaker number, the weaker unemployment rate was the first weak numbers we've seen. The market pounced on them, and we saw a really big dollar sell-off, right? So that sets us up for really good trading conditions. And what I mean by that is, if I just switch you over here just momentarily to my charts, we get these currencies, and I'm just looking at the global markets page here, but we're going to start to see, a lot of these instruments back in the middle of their range. Okay, well, equity markets aren't over yet. They got a bit of work to do, but you're looking at a lot of these variables. You are starting to see things come back into sort of more, familiar ranges. Sorry, I'm just trying to find my other pen here. So you get the dollar sort of rolling over a bit. Now, by no stretch is the dollar rally over, right? It's gone so far. It's got a long way to go before we break back down. But what we can see is we've got some great levels coming up here. Dollar Swiss is breaking down, even dollar yen under pressure. Dollar CAD's had a bit of a pullback. As oil is rallying there as well. So you think dollar CAD would keep going lower. Kiwi and Aussie, the footy's off the throat of those pairs as well. Now, come back to the calendar. This is where you've got to anticipate and connect the dots, right? Last week's weaker US non-farms, dollar sell-off, right? The market is now really waiting for the key number, right? And that's the US CPI numbers on Thursday, to tell us whether the dollar goes down or goes back up, right? This is a great situation because we've pretty much got trading opportunities both sides, because a lot of these instruments, as I was just sort of circling there, like say, look at euro, even sterling, there's other levels around, dollar yen, the dollar index, etc., where we're at critical technical levels. And what we could see is a flush out. So say, for instance, we get a slightly weaker US CPI print, well, we're going to see these numbers like a lot of clean out of long dollar positions, right? In actual fact, we probably might see a lot of take profiting or fund managers, etc., taking profit ahead of the CPI number because there's a lot of doubt over what's going on. So a weaker CPI number almost can confirm, it's only early doors, maybe a top of the US economy, right? Now, I say it's a stretch. They'd like to see 2 months in a row where you get weaker numbers. Then they know they got control of it. And then we see the dollar slowly fall. So at the moment, we're going to see some explosive moves. If the numbers come out strong, we'll forget about those weak non-farm payrolls. The dollar will be just kicking back into gear. And obviously the weaker numbers under around 7.8, 7.7% for the CPI number, you're going to see the dollar get crushed, right? And that's going to give equity markets a real good pump as well. All right, so that's where we are. Let me just come back to the rest of the calendar to give you a bit more of a run through there. So really, from what I was just saying, the real week, like this, so see how some of these calendars, I mean, the Westpac consumer confidence numbers, this is by no means a common high impacting number. But you know what? Consumer confidence globally now is a thing. So make sure you're checking these things out. As you can see here, slightly weaker expectations. You got to expect this globally, right? Higher interest rates, consumer confidence. Okay, everyone's crapping themselves, whether if they've got debt, mortgages, etc. So that's going to be a very common theme, right? So if interest rates started coming off, that's when you're looking for those consumer confidence numbers to bounce back. But just scrolling down here, you're really looking Wednesday, if anything, Thursday before it gets very exciting, right? We're talking about these US inflation numbers, consensus month on or year on year 8%, and the month on month, or sorry, the core inflation number year on year 6.5, the inflation rate 8%. So keep an eye on that. That's where the action is, right? As I was saying, a number 7.8 or below, that's a much weaker dollar. Above 8.1, 8.2, you're looking at the dollar just coming back harder than it probably was before. And then you got some GDP numbers out of the UK. You know what? I think the GDP numbers are a sideshow at the moment, like a bit of a kick away number, because it's still about employment and, if anything, about inflation, right? So that's where we're at. Otherwise, I'll tell you what, Friday would be a pretty big day in the UK, but you know what, or Thursday night, or Friday night. But at the moment, I just think we're so close to the raw nerve of inflation that, like GDP is an overall health check, whereas industrial production, manufacturing production may have a bit more to say about what happens in sterling than the GDP number. So you could, if you had to sort of work out what your plan was for the week, well, pretty much chill out, right? As I said, you got this side event, the US midterms. You've got some bits and pieces coming out of China, that coronavirus and all that sort of stuff. The whole global economy or global communities a bit desensitized to the pandemic. And if China's got it, everyone's like, well, this is rumors. They're like, well, you guys started it, so good luck. Anyway, focus on Thursday's CPI numbers out of the US. They are the main game, and this will determine what happens across a lot of instruments, right? We're talking all the US related pairs, right? So you're talking all the major currencies. You're talking about a lot of the commodities, okay, all against the US dollar. They will all be in play. Of course, most importantly will be the equity markets. And we're talking about the US equity markets, and they will have a direct impact on the global equities. And with that, you've got the risk on, risk off profile, okay? And if, equities rally, risk on, you're going to see that flow into the cryptos as well. So pretty much for me, I don't think there's much to do except wait for, get into Wednesday, then start to tune up your technicals on all your charts, the instruments that you can see with clear direction or good technical setups. And then you come into Thursday's trading in North America, you look for that number, you match it up with the technicals, and that's how you put the trades together. All right, guys, have a good week. I've got to say, this CPI number it takes a long time to build up pressure. The pressure is built up. The non-farms have built up more pressure on the US dollar. This is probably one of the best numbers I've seen in the last 3 to 4 months. So make sure, if you can, prepare for the opportunity. All right, good luck. All the best. Cheerio.